One of the biggest conflicts in the last couple of years has just taken place. The US and Iran war headlines are everywhere, but what does this mean for the stock market? Should we panic sell everything, and is there a market crash coming? Or can we look back at history and previous conflicts to understand one simple pattern that happens every time that we can position ourselves correctly in this market? Because unfortunately, 90% of traders and investors are confused and don't know what to do, and this will cause them to lose money, while the institutions and traders that are informed will position themselves correctly during this conflict. By the end of this video, I will teach you everything you need to know, not only about this conflict, but how to position yourself with any conflict in the market using a simple 3-step framework. And then I'll show you my exact game plan, key levels, and trades that I'm going to be looking at this week to take advantage of this volatility. All right, so for February, this is the portfolio update. Definitely a little bit more red days and a slower month. It was a lot choppier on the higher time frame, but that's what I'm going to talk about in this video as well. So the major news today was Donald Trump officially joins military combat operations. He had an 8-minute video that was recently posted by the White House where he explains he's going to be joining the military combat operations in Iran, and he talks about his plan. However, he said this one will not be a quick strike. So unlike other times where we've seen the same conflict, this time Trump says it will not be quick. However, he will ensure that the US meets their criteria. And because of this, both USA and Israel launch an attack on Iran. And so far, as I'm recording this video, multiple strikes have been hit not only to Iran, but also Dubai, Abu Dhabi, Qatar, and multiple countries in the Middle East. So the main thing every time we have a conflict in the world is most people start panic selling. They don't know what to do. But for us as an investor or trader, we want to follow a 3-step framework and understand exactly what is going on to make informed decisions. And by the end of this video, I'm not only going to explain this 3-step framework, I'm going to explain my game plan going into this week of trading and show you the exact key levels and trades that I'll be focusing on this week with this conflict in mind. So for step 1, what we need to understand is market movement during the conflict. Where is the market moving and where is the participation from the large institutions? For step 2, we need to focus on money flow. Is there a sector rotation that we should be primarily focusing on this week? Or is there specific stocks that we should be focusing on during this conflict? And finally, step 3, how to position yourself without gambling on the headlines. Instead of looking at every single headline this week, especially if you're on social media and you go over to X, YouTube, Instagram, a lot of different headlines will be forming this week as it is a catalyst market. However, it is important that we're not gambling on them and we are using this 3-step framework to stay ahead of the market. So right now, because of this conflict, most people are calling for a market crash, but this is where we need to understand history and we need to take a look back to see what happened previously every time we've had these type of conflicts. The first conflict we can see here is the Iran war in 2003. Now, this war was a significant war for us. However, what happened? The Iran war happened March 20th in 2003. We can see the market actually rallied, dipped, and then had a rally the entire year after that. So the entire year, we actually went from around 880 to 1100. So this conflict actually made the market rally compared to crashing it. Now, if we look back at 2001, there were 2 major conflicts that happened during this year, but we can see the first one did drop the market in September. However, after that, once the conflict started in the Middle East, we can see we still ended the year at a high compared to the lows that we were at. This can be said for 1991 as well. The market rallied from all the way 300s up to 420s in this specific year. And even if we look back all the way into 1941 in Pearl Harbor, we can see because this war was a little bit longer, the market did drop for around a year. However, after that, the market rallied aggressively for the remaining 3 to 4 years, and we moved from almost 8 to 18 after that conflict. So with this information, what does that mean for the names we trade? And is it the time to panic sell everything, or should we focus on bullish opportunities? Well, in this video, let me explain my exact game plan going into this week. The first thing we need to understand is the news events that are already planned, other than the news catalyst that will happen with the conflict, of course. And remember, I'm going to be showing you all the charts on SPY, QQQ, gold, Bitcoin, and all the different names we should look for. But as we can see this week, 8:30 a.m. on Thursday, we have unemployment claims. That's going to be the biggest planned news factor for this week. In terms of how investors feel, of course, there's going to be a little bit more fear in the markets now, especially with this conflict in the Middle East. However, this will also bring a little bit of volatility in the markets in terms of rate cuts. This will not happen until June or July this year. And for major earnings this week, we really don't have any major earnings this week, as once again, this is going to be much more of a news catalyst market and you need to be ahead of the news. And therefore, if you want updated news catalyst videos throughout this week, make sure to leave this video a like and let me know in the comments down below, and I will make those updated videos throughout this week for you. But with that being said, let's get right into the charts where I show you my key levels and the the trades that I'm going to be looking for this week. All right, so I'm going to be explaining my thesis coming into this week. Not only will I be showing you SPY, QQQ, and the tech names, but I'll also be showing you gold, Bitcoin, and oil, because those are names that you want to focus on this week, whether you trade them or not. With this being said, as we can see with SPY, this one has been consolidating in range for quite some time, almost since December. It's been very hard price action in February as well, because we really haven't done anything. However, with this news conflict now, what I would like to see is SPY actually dip into 669.11s before another push to the upside. This would be a good dip and a healthy dip for SPY because it would finally break it out of its range. Once SPY is out of this range, it will be a lot more simple to trade because we'll have more of a clear trend every single day. However, right now we just don't have that trend and we are waiting for a catalyst in the market, which we did get with this news. So for myself, 669.11 will be a very important key level that I'll be looking at. And of course, SPY does have room into 649.62s as well. However, if we dip below 669.11s, then that means from all-time highs, we would dip around 6%. Therefore, if we do want to dip into that area, I'm going to be a little bit more careful, but we can see last time buyers did step up in this area for a move back to the upside. In terms of QQQ, we have still been in the same range. We can see QQ has been in this range since almost October, and therefore it has been a little bit more difficult to trade. And especially in February, we can see that this range got even tighter than before. So we've been in this range from around 597 to 617, which is a very small range for QQQ, and we just have not done anything. For myself, of course, this one remains bullish above 600s. I've talked about this multiple times on this channel as well. However, this week, if this one does want to dip, it has a clear level into 580.42s. We can look for a simple bounce play off of this area of 580.42s for a move back to the upside, as this is the last area that it bounced off of in November. However, for this one, as the market opens up on Monday, whether it gaps up or it gaps down, this one will still remain bullish above 580.42s. And then for Apple, I gave you this buy zone multiple times now at 248. This one has continued to hold this level. This one is in a little bit more consolidation with, of course, some sellers stepping in back near these highs. If Apple can break back above 281s, of course, this will be bullish for the markets. However, Apple does have room back into 248 and 228. So if Apple wants to dip this week, 248 is going to be my key level that I'm going to be looking for. If we do gap down, this is where some buyers can step in, or 228. Now remember, Apple's a little bit of a slower mover. So if we do dip into this area, I wouldn't be surprised if we consolidate for around a week before the next leg up if we want to get that. So for Apple near this area, I'm going to need strong price action and big buyers to step in if I'm looking to take a swing position entry. But if Apple does drop below 248s, then 228 area is also there, and that's going to be the secondary support level for Apple. Of course, this one is bullish on the higher time frame overall. On Tesla, this one has been in range since September. As we can see on Tesla, from September till now, we've simply been making highs, lows, highs, lows, highs, and then coming back for lows. Therefore, for myself, this one is a lot more consolidation and chop, but it is still technically a sell below this area, as once we broke below, this one's been downtrending. And on top of that, we can also see we've been in this range formation on Tesla. Where I want to see buyers step in on Tesla is going to be around this area right here, 379.80s. This is where buyers should step in on Tesla for that next leg to the upside. If buyers don't step in near this 379.80s, then I will be looking for that move down into 345.45 on Tesla. And once again, if it does dip into that level, that would be almost a 30% correction from all-time highs into that 345.45 level. For AMD, this one has been in consolidation since October as well. However, AMD is a little bit more bearish, as we did gap down on AMD after earnings, and it has not been able to get back above this gap level. For myself, if AMD drops below 196, it has clear room into 171.63s. It held this area in November and multiple times in February, so the support area is getting a little bit weaker because each time buyers and sellers step into a level, it only makes that level weaker because right now buyers are of course trying to defend. But if sellers break this area, then it has clear room into 171.63s. Therefore, I'm a little bit more bearish on AMD. Only if it gets back above 228.25s will I be bullish on this name. For Nvidia, we had earnings, and we can see this one after earnings, we tried to break above 193.50s, failed that, and have came all the way back down, and big sellers stepped in, even though we actually beat earnings. So good earnings, but Nvidia dropped off of the news. Now for me, Nvidia is a sell below 178s because it has room into 169.60s. So this is going to be the next area where Nvidia could get a potential bounce again. However, this one has also been in range just like every other tech name that I've talked about, and we can see that sector rotation that I was talking about earlier. In tech, it's been a lot of range and consolidation because of SPY and QQQ. However, for us, 169.60s is going to be a key level. I'm not really interested in Nvidia above 178s right now just because of the consolidation that we've had. I would only be interested if Nvidia comes comes back near 193.50s for that bullish side. However, right now I am going to lean a little bit more bearish into 169.60s coming into Monday. Of course, with SNDK, this one definitely a little bit more bullish. This one also a semiconductor. We can see buyers are stepping in, consolidation. We want to break back above 666 for a move up to 720s. However, this one does have room as long as it stays above 537.94s. This one will remain to be bullish along with MU. MU has a clear flat top here as well. I talked about this last week, but MU, we really want to break above 431s for that move into 455s. If MU does fail this green box here, which is around 380s, then it has clear room down into 349. So we're going to keep an eye out on MU and SNDK, not on my main watch this week. These are much more secondary watches if they show strength or weakness during the intraday price action. However, two names that are definitely a little bit more bullish compared to the rest of the market. In terms of gold, now gold has been increasing very, very significantly. We can see we actually had a little bit of a drop on gold down into 4,500, but after this news conflict, we can see buyers are now stepping back up on gold and we are pushing back above into 5,200s. Gold has clear room up into 5,428 key area, especially as this Iran conflict escalates. Every time we have a war conflict, gold and metals typically tend to do well, and therefore 5,428.33 is going to be the next key area. We are kind of breaking out of this kind of flat top that we had on gold as well, so buyers are stepping in. In terms of Bitcoin, this one did end up crashing all the way back down into 65,000s here today. Now for myself, the key area is going to be 54,000, so around a 10,000 more dollar drop on Bitcoin. This would mean from all-time highs, Bitcoin will drop around 57 to 60%, which is a very steep drop. It has already dropped from all-time highs around 50%. So what I would be looking for is that $50,000 pickup area for Bitcoin. But once again, with this conflict right now, we are just basing right at the 62,826 area. For myself, I'll only be looking to pick up Bitcoin near 54,000. This would be a good average entry for continuation back to the upside. But once again, we're going to have to be careful with the price action here, especially with the news catalyst that we are seeing. And finally, oil. Now, this one, every time you have a news conflict, you need to understand what oil's doing. We can see oil, this one has been dropping for quite some time. However, starting 2026, this one has now started moving back to the upside. This one is a buy above $62 here. So we can see it above 62. This one, buyers are stepping in. Of course, with the news catalyst, this one, most likely $70 is in play this week for oil. So $70 is going to be the key profit target this week for oil. And then of course, we have a move all the way back up into $77 as well. But all these key levels primarily depend on how the market opens up on Monday. And remember, I live trade every single day in the accelerator where I give my pre-market charts, the exact key levels I'm looking at, and I live trade with the exact trades I'm taking in the accelerator. And remember, if you want more updated news videos throughout this week, make sure to leave this video a like. If you have any questions, put them in the comments down below. Subscribe to the channel for more market updates, and I will see you on Monday with a brand new video.